Connection established.
Hey everyone, hope you're all doing well. Welcome back to the channel. Today will be day 11 of the Millionaire Memecoin Mindset series. And today's discussion will be about the detachment from money and how we should all be treating money as just a figure and number and just a piece of data rather than the actual financial dollar amount. And this will help us to detach emotionally from making poor judgment decisions because we are looking at it as money and not as a trade and just financial data. Before we begin, if you do need a trading platform, get Axiom, link in the bio. It's a VIP trading fee discount, so you will get a nice discount, and also Axiom's already the cheapest, so it will just further improve how cheap the trading platform is for you. Without further ado, let's get into the video. So, detachment from money. What is it? Well, obviously we know what that means, right? Detaching from money means that we should take ourselves out of the equation or take money out of the equation and not relate to it. And why is this important? Well, in trading, most of us are here to make money, right? That's our goal. And so the one metric that we're looking at is money. So that's the issue. It's a twofold kind of step process. We're here to make money, so we only focus on money. And that's what hinders our trading and our growth. And why is that? Well, I'm sure many of you have entered trades where you're in profit, right? But all you do is you don't look at the chart. You don't look at the candles. You don't look at what's going on in the chart. You look at your bottom right profit. I bought, sold, profit. You're only looking at that. Oh, I see it going up. I see it going up. I got to sell. I see it going up. You're not focusing on the chart. You're not focusing on the coin and the narrative. You're just focusing, oh, it's going down. I'm down money. It's going up. I'm up money. That's all you're focusing on. And that's the issue, because you're like a horse in races, right? Where they put those blinders on and all they could see is going forward. They can't see side to side, right? They can't see backwards. It's just forward. And that's the issue. And that's what many of us do or have been doing or continue to do, is we just focus on forward, profit and loss. And that's the issue, because sometimes you're in a good coin, but it goes down. And many of you would be down in money and you would cut your loss because you're negative, right? Oh, the coin must be bad. I'm negative. I'm not in profit. Meanwhile, it's just a normal dump, right? Just normal sell off, and buyers will step in and take over it. And so that's the issue. Many of us are just looking at that side of the screen. We're not looking at the chart, looking at, oh, this zone right here will probably support it. And if I look at my profit and loss, I'll be negative here and I'll probably sell because I'm negative. However, it'll probably bounce right there and go all the way back up and I'll be in profit. And so that's the issue. Many of you don't look at the chart. You read the financials as life and death. The profit and loss should just be data to you. It should just be data that you chuck into your journal and identify. You should just journal all those trades you take in the profit and loss. That's just data. Just as I mentioned in the journaling video in day 5. It's just data, because that is what's going to fuel your trading to be better. Detaching from money. And I know it sounds counterintuitive. We're here for money, to make money in meme coins, but I'm detaching myself from the money. Well, that's what you need to do in trading, is detach from the money. Because once money gets involved, your emotions speed up, your heart races. Oh, I'm up so much money, I gotta sell. Oh, I put in too much money, blah, blah, blah. Well, if you're adhering to your strategy and your risk management, the money's just data. If I put in $10, think of it as 10 data points. I'm putting in 10 data points and I want to see if my data points increase or decrease with this trade and with this strategy. So if I put in 10 and I get 14, okay, so this strategy got me 40% plus data points. Just think of it as data. Don't think of it as money, because that's what happens is you start seeing the money. Oh, I put in 10 Solana. I put in $1,500. I'm up 20%. That's $300. I need the money back. I need the money back. That's a lot of money. Meanwhile, the trade could go 20 times higher, but you took $300 because you're thinking in dollars and not in the coin narrative and not the chart. And that, I feel, is the most prevalent issue amongst newer traders, is viewing it as money. Viewing it as money is what forces you to do rash decisions. And what happens is you don't let your own strategy and your own perspective and thesis on a coin play out. That's the issue. Because instead of letting your thesis play out, oh, I think it goes to say 20 million because it's a good coin, good narrative, it has a lot of support, blah, blah, blah. But say you buy at $1 million, you see at 2 million, oh, I'm up 100%, I'm up X amount of money, I gotta take it. But what happened to your thesis at 20 million? You think it's going to 20 million when we're at 1 million, but you're selling at 2 million. Well, at least wait till at least 5 or 10, right? If you're aiming for 20 and selling at 2, then what's the point of that thesis? There's no thesis. You're better off just literally saying, I'm going to take profit at 2. Because if you think a coin has this much potential, but you're selling this early, what's the point? And the reason you're taking the profits early is because you're focusing on the money. You're not focusing on, okay, I bought it at 1 million. This is a $20 million coin. I'm not going to sell even my initial amount until at least 10 million. This is a 20 million coin. Easy. Because if you have an early good entry, then there's no reason for you to be taking profits. And the only reason you do take profits is because you're not detached from the money. The thing you have to do is once you enter a trade, consider that money gone forever. You don't see it anymore. All right. So this will not only help your risk management because you won't put in your entire portfolio, but also it will help you to understand. Focus on the chart, the coin, and the narrative. Because far too many times I've seen, and I've done this myself in the past, is I throw an amount of money and it's a great coin. I think I'll go 10x. And then when I'm up 100% profit, 200% profit, I'm like, oh, that's a lot of money. I'm out. I'm up X amount of money. I'm out. But what happened to your thesis? What you thought the coin was going to go to, right? What happened to that? Nothing changed. It's just you saw the money. You looked at the money. You didn't detach yourself from it. And how many times have you guys been and girls been in a coin and you sold too early and you knew it was going to go higher and you sold too early and then it went exactly to where you thought. And then you were mad at yourself. Oh, I knew it. Why did I sell? Because you were focused on the money. You let the money and the figure in the bottom right-hand corner, the green or the red number, dictate your decisions, dictate your judgment and your emotions. And that's not good. You cannot, as a trader, let your emotions and the monetary figure on your screen dictate your decisions. Your decisions should dictate the money, not the money dictate you. And that's the issue. Many of us are easily persuaded by a trade in the financial profit or loss of it. Because if the profit's going up, what do? We take the profit very quickly, right? Many of us, once we're in profit, we get out really, really fast. And then it keeps going higher and we get mad. On the other hand, when we're in a trade and it's going lower, what do? Do we take the loss quickly? No. Now we want to be patient, right? Now everyone all of a sudden wants to be patient. Oh, we're down money. Oh, it'll come back. It'll come back. You know, we're only down 30%. It'll come back. Then we're down 50%. Oh, no, it'll come back. Then we're down 70%. Oh, yeah, it'll come back. Don't worry. It'll come back. And then it goes back to maybe minus 50%, goes up a little. And then you're like, oh, yeah, see, it's coming back. It'll go back. And then they nuke it again. And then you're fully lost. Now, how common is that? Very, right? I've done that millions of times, thousands of times. And that's the issue. We're letting our profit and loss dictate our decisions. When we're in profit, we cut our trade too short, right? Because we're like, ooh, I'm up 20%. Money, give me money. But when we're down 20%, we don't take the loss. Isn't that interesting? Instead, we're like, oh yeah, I'll come back. Let's let it run. It'll come back. And then it keeps going lower and you keep rehearsing to yourself, oh yeah, I'll come back. I'm not worried. I'm definitely not worried. I'm not stressed at all. And I find that very fun. And that's a trading psychology issue that many face. I face sometimes to this day, right? Where we don't follow the cardinal rule. The cardinal rule is let your runners run and cut your losers short, right? That's the cardinal rule that everyone has to follow. Let your runners run. If you're in profit and it's a runner, let it run. And this applies to any sort of trading. But when we're in a loss, we're in a loser, what do? We let it run then because we're so certain that it's going to go higher and it'll go back up. And that's the issue. You shouldn't be certain. When the market or meme coin shows you you're wrong, you do two things. You cut the losing trade very, very early for a minimal loss, 10, 20%, and then you just wait and get back in if you believe it's going to go back in and go higher. But you should not be cutting your winners early, but letting your losers run. That's counterintuitive because your winners, theoretically, are infinite return. Because when you're losing, it could only go down 100%. However, your winners could go X amount of percent higher. They could go 20,000% higher, 1,000% higher. All of these numbers. And so that's why you take the losses very quickly. You cut them quickly because a 10, 20% loss is not the end of the world. But if it goes down to 70%, that's significantly more. And that's what really harms you. And so the issue is, do I think it comes back when I'm down that much? But wouldn't it be easier to just cut it at 20%, detach yourself from the trade and come back when it looks better? You'll save yourself a lot more rugs. Because if you do this 10 times, right, and you cut a loss at 20% 10 times, say 8 of those times it would have went to 60% and it would have never came back, right? It'd hover at 60%. So you already saved yourself a net of 40% per trade on 8 of them. And then on 2 trades, okay, it would have went to 60 and then would have bounced back to profit. But guess what? You would have just re-entered anyways once the chart looks better. So overall, cut your losses and your losers quickly and let your runners run. Detach yourself from the money. If you have a thesis and a narrative that a coin goes XYZ, I don't want you selling it 20 times less than what you think. If you buy a coin at $1 million, you think it goes to 20 million, you cannot be selling before it at the minimum 5 million. Minimum 5 million. Minimum. Like, it's just common sense, guys and girls. If you think it's going to XYZ, you can't be selling at 20% profit. That just hinders your growth because when you have a conviction and a thesis behind a coin, that's usually when you're right because those coins usually turn out to be very obvious. And that's the issue is because those obvious plays don't happen all the time. They're not that frequent. They're quite rare. And so when you have that feeling in your gut, this is going here, let your gut speak for yourself, right? Speak for you. speak for your trading and let it do its thing. Because far too many times people believe that it goes XYZ, but sell it too early, and then it goes exactly where they thought it was going to go. And then they start being mad. Oh, I knew it. This is rigged. Meme coins are rigged because I knew it was going to go there, but I sold it here. Well, you're the one clicking the buttons, aren't you? I didn't click them for you, right? You clicked the button to buy. You clicked the buttons to sell. No one clicked them for you. There's nothing rigged about it. And so that's what folks need to realize. Detach yourself from the money. Think of it as just a data point for your journal. I put in 10 Solana, so think of it as 10 data points, right? Or whatever number. Make up a random number. I put in 10 cookies. I don't care. Make up a number that takes away the aspect of money from you, because that's what's going to hinder your growth, is focusing on the money. Because a lot of times you'll cut a winner really early and you'll be focused on the money. You'll be happy with $200-$300, but that trade could have made you $10,000. And that's my spiel. That's my little rant of the day. Day 11, detaching yourself from money, of the Millionaire Memecoin Mindset. Hopefully you all enjoyed. Hopefully you all learned something. Once again, if you do need a trading platform, sign up using Axiom, link in the bio. You'll get the VIP trading discount off your fees. I appreciate you all. Love you all. Talk to you soon. Bye-bye.